Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about stocks mainly because they've been hit even harder than I've expected. It's not looking pretty out there, but it is looking like opportunity. And I'll be talking about some opportunities later today. So basically what is going on is a total capitulation on everything with inflation. So inflation is eating up the stock's value per se. It's not just that, it's what the economists and people behind the Fed are doing to combat the inflation, which in investors' eyes is not enough. That's why we are falling. Um, for example, these prices are getting to the point of, it's getting ridiculous. For example, looking at Microsoft 237, the lowest it's been since March 2021. Let's look at the SP 500, the lowest it's been since November 2020. And of all weird things, we're looking at QQQ here, 275, when the COVID high was 235. So we were only at $40 for the total QQQ index. Once we were up from 240 to 400, now at 275. Many stocks are back to their COVID levels, including, of course, Facebook, below COVID levels, which is hard to imagine. We have Visa getting below the pre-COVID levels, so back down below 185. These are all the stocks I'm mainly keeping an eye on. Starbucks been hit rough lately, still following that channel. Hopefully we could see a lower price because I'd love to scoop up some more shares. We have Home Depot at 270, which, but the thing is, here's the weird thing, right? Looking at Nvidia is at 125 and it's come down from 350 or so, 346, but it's still got a lot of room from the COVID low, mainly because this company benefited most from COVID. Like many stocks, the semiconductor rush helped Nvidia because of all the, of course, the GPUs going towards crypto mining, which took off after COVID. Basically, what we're still looking at is a lot of these companies are still, they're getting hit from a slowdown in the economy, what many people are calling a recession, and is what is often used as a term when the stock market is down as much as it is. We can see from the very top, 480 down to the price today, down 23% in the last 259 days, as you can see right there. And that's just the general index. Let's look at the QQQ. The tech index tells a different story. So that other one was 259 days, 23% down. We're looking at 301 days, 32.6% down. So down quite a lot more, just about 10% more than the regular SP 500. So it seems that tech is the better, or I should say more discounted stock group here. That includes stocks like Microsoft. We're looking at Qualcomm. Intel, of course, has been hit heavily. You could factor in PayPal there, but PayPal, of course, is in a different world in terms of getting hit heavy. Tech, we're looking at Broadcom, which is not even in the same realm when it was during COVID. You can see it fell 300 to 170. Now we're at 470, so it's not even a discussion. Apple at 150, not a huge deal. You can see the depths of COVID at 56, so we're still triple. Google at 98, up double from COVID lows. Let's check out Amazon. You can see from COVID lows at 82, now we're only at 112. Square 56, right at COVID levels. And of course, Facebook at 140, below COVID levels. Nvidia still way above. So just out of these couple of picks here, we could see the sort of consolidation that we've had for a little bit here, and no real direct, no real direction, I should say, for lack of a better word. Now we're headed straight down, and I do say that we see another bounce here soon. I say that the chances of that are high, but who knows? I know that over the long term, you do not want to bet against America. and that's where you do, and by essentially not buying these indexes at these prices, these cheap stocks. So with that being said, I hope you guys have a great weekend. Consider buying, consider at least looking into these stocks, because now is getting really real, and the opportunity is definitely out there in stocks, real estate, and especially crypto. So hope you guys have a great weekend. Thanks for watching.